Hey everyone, welcome to the Immortal Trader channel. This video could change the way you trade. Drop your questions in the comments, hit that like button, and don't forget to subscribe. What is risk to reward and why does it matter? Picture this. You've got a treasure map, but to get to the gold, you've got to cross a risky jungle. If the danger outweighs the treasure's value, would you go? Probably not. That's exactly how risk to reward works in trading. If your risk to reward ratio isn't solid, even if your technical analysis is spot on, your money management is flawless. Or your mindset is bulletproof, you won't achieve consistent profit. Risk to reward is the balance between the amount you're willing to lose and the profits you're aiming for. The goal is to ensure your potential profit is at least 2 or 3 times your risk. For example, if you risk $50 on a trade, you should aim for at least $150 in profit to achieve a 1-to-3 risk to reward ratio. A real life example, think about buying a concert ticket for $200 to see your favorite artist. Your risk is $200. If the concert gets cancelled, you'll lose that money. But if it happens, the experience is worth way more than $200. In trading, you need the same logic. You don't risk $500 to make $50. That's like spending $200 on a ticket for a 5-minute show. It's not worth it. Sadly, many new traders make this mistake. In the market, they might risk $1,000 to chase a $200 profit. That's a 1 to 0.2 ratio. Disastrous. It's like sailing a leaky boat in the middle of the ocean. Sooner or later, you're going down. Why a stop loss is non-negotiable? Trading without a stop loss is like driving without a seatbelt. If you crash, there is nothing to protect you. A stop loss is your safety net. It limits your loss so one bad trade doesn't wipe out your account. My advice to new traders, if your account is under $50,000, always trade with a stop loss. For example, risk only 1% of your capital per trade and set a clear stop loss. Trading without a stop loss is not trading, it's gambling. Trading is a discipline, not a game of chance. Stick to the rules and take a stop loss seriously. How to apply risk to reward on a chart. Let's jump into a practical example on TradingView. I want to open a long position on Ethereum. I select the long position tool and follow these steps. 1. Entry point. The candle where I entered the trade. 2. Stop loss. It's here. The price where I will exit if the market moves against me. 3. It's here. Profit targets. The price I accept the market to hit for my profit. For example, Ethereum is trading at 3054. I open a long position with a stop loss 9% lower at $2,781 and a profit target 27% higher at $3,864. That's a 1-to-3 risk to reward ratio. A real trading story. A few days ago, I opened a short position on Solana at 127. I set my stop loss 2% lower at $124. And we can see Solana's charts. Here, yeah. I set my stop loss 2% lower at 124. And look at this, it is short position tool. And it's long position tool. I set my stop loss 2% lower at $124 and my profit target was 7% higher at 133. My risk to reward ratio was 1-to-3. The market moved my way and I moved my stop loss at a 5% profit. Even if the market reversed, I was safe. That win came from nailing the risk to reward ratio. If I'd gone for a 1-to-1 ratio, one stop loss could have raised the profit from several trades. Don't forget to drink water. Your health is more important than everything. That's why this principle is a game changer. 4 golden tips for risk to reward. 1. Aim for at least 1-to-2. If your ratio is below 1-to-2, your long-term profits are at risk. 2. Avoid trading near key levels. If you are below a strong resistance and your ratio is under 1-to-2, wait for the breakout before entering. 3. Reject bad signals. Even a signal claims a 95% win rate but offer a 1-to-1 ratio, skip it. 4. Stay disciplined. Profits you haven't locked in aren't yours yet. Don't fear losses. Fear trading without a plan. Motivation for tough days. Trading isn't just about charts and strategies. It's about mindset. There are days when the market stresses you out or life throws curveballs. A pro trader pushes through. Look in the mirror, give yourself a pep talk and say, I've got this. No one coming to hand your motivation. You've got to be your own hero. Wrapping up and call to action. Risk to reward is the heartbeat of trading. Stick to a minimum 1-to-2 or 1-to-3 ratio, and your chance of structures skyrocket. Now, it's your turn. Head to your chart. Practice a mock trade on TradingView and calculate your risk to reward ratio. Share your results in the comments. I love to see them. Got questions? Drop them below and I will answer. Smash that like button, subscribe and hit the bells so you don't miss the next videos. Until out next profitable trade. Stay sharp. Goodbye.